Hello everyone, Melinda Jennison's my name, Managing Director of Streamline Property Buyers. Today I'm going to be sharing with you the latest market update for the Brisbane property market, looking at CoreLogic and PropTrack data as well as data from SQM Research over the last month being up to the end of August. Now, if we look at the market snapshot first and foremost, we've had listing volumes increase 7.3%. That's total listings over the month from July through to August. The auction clearance rates in Brisbane sat at 57% across August. Buyer activity is still fairly high for the strong or for the better A-grade properties. House values increased 0.9% across the month and unit values were up 1.7% across the same period. And gross yields for all dwellings currently sitting at 3.5%. When we look at the total listing volumes, they are higher again than last month. So total listing volumes were actually up 7.3%. However, new listings were only 2.4% higher month on month. So what that means is there's a little bit of older stock that's been sitting on the market a little longer. And potentially that's that B and C grade stock that has typically received lower levels of demand across the city. Sales volumes have increased up 7.3% according to CoreLogic up to the end of August. So that indicates that the demand for property is still relatively strong across the city. The demand in terms of auction clearance rates for June sitting at 64.8%, July 61.8%, and then in August it did drop slightly to 57%. What I will say is that we are seeing the vendor expectations shift a little bit faster than the buyer expectations. So whilst we're seeing a few properties now start to pass in, a lot of those are selling very quickly after the auction. Now, in Queensland, remember that there is no exclusive right to negotiate when the highest bidder holds the bid at an auction. So what that means is every buyer is invited to put forward an offer, and quite often we're seeing some conditional buyers, that is those with finance conditions especially, come into play, and then usually it becomes a multiple offer process. And this can typically draw out a higher price compared to at auction where people must be unconditional. Days on market currently sitting at 21 days across the city. 12 months ago, this was 19 days. So there's been a little more time, I guess you could say, for buyers to consider their opportunities. Looking at CoreLogic dwelling values data up to the end of August, we saw a shift of 1.1% in dwelling values across the month of August, and that's shown an annual change of 15% now here in Brisbane. PropTrack data also shows the same positive price shift across the month and also very strong annual growth, 13.95%. Interestingly, since March 2020, you can see there Brisbane up 74%. So really strong growth in Brisbane as well as in Adelaide and Perth since the pandemic. Price growth segmentation is definitely showing that the lower end of the market in terms of dwelling values is growing at a faster rate than the top end of the market. So 5% growth in the last quarter up to the end of August in the lowest 25% of property dwelling values. And the top part of the market, the most expensive 25% of the market, has shifted only 1.8% in the same period of time. Remember, this is dwellings data, and we are seeing that lower priced unit segment of the market shift at more than double the pace compared to the housing market, and that will cause some compositional bias in this dwellings values data. Now looking at house price changes or dwelling price changes rather over the last 12 months according to CoreLogic. So you can see there Brisbane sitting in second place with 15% price growth over the last 12 months. Now, Perth has been outperforming with 24.4% growth over the same period, and Adelaide very close to Brisbane at 14.9%. But these three markets, largely driven by supply shortages in terms of much lower listing volumes, continue to drive the market changes across Australia at a national level. Looking at the last 3 months, we've seen Brisbane's rate of growth start to ease, and we've now seen dwelling values shift 2.9% over the last 3 months. Now, that is compared to Adelaide, which is still showing 3-monthly growth trends at 4%, and Perth, of course, still outperforming at 5.7% changes in dwelling values over the last 3 months. Now let's look at house values here in Brisbane over the last 4 weeks. According to CoreLogic, house prices shifted 0.9% throughout August. That's now showing quarterly growth changes in the housing segment of the market at 2.5% and annual shifts of 14.1%. So the median house value for a house in Brisbane is now sitting at $966,382 according to CoreLogic data. Now that is definitely higher than Sydney. It's almost on par with Canberra and definitely well ahead of Melbourne in terms of median house prices now. Looking at PropTrack data, 0.4% growth across the month has been recorded for Brisbane, and that's showing annual changes in house prices of 13.4%. And you can see there that median house value very similar to CoreLogic data. Unit values in Brisbane, as I mentioned previously, units are still outperforming the housing market. So we saw a 1.7% change in the monthly value of a unit over the last 4 weeks of August. Quarterly values have shifted 5% and annually we're at 19.4%. So this is very strong growth in the unit segment of the market. And a lot of this is driven by affordability shifts because the median unit value here in Brisbane is $653,325. So it's a much more affordable segment of the market. Now we can see there, based on all other capital city markets, the Brisbane unit sector is now the second most expensive unit market across all of Australia. And that's been driven by the recent very strong growth that we have experienced in our market. According to PropTrack data, unit values also showed positive growth throughout August and annual growth sitting at 17.2% according to this data set. When we look at the property value changes, this graph shows the monthly value changes in the house market and the unit market since the onset of the pandemic. So the units are the light blue lines and the houses are the darker blue lines. So we can definitely see to the right-hand side of the graph the outperformance in the unit segment of the market in recent months compared to the housing market. But we can also see during the period throughout 2022, as interest rates were increasing, how much more that impacted the housing market in terms of negative monthly price growth compared to the unit market. So people let go of properties in the housing segment of the market for lower prices than they were potentially able to achieve previously, whereas the unit segment of the market remained much more subdued. Vacancy rates, there's been no change. Vacancy rates are still very tight, sitting at 1.1% across the city, although there are some suburbs that have very tight vacancy well below that 1% mark. So there's definitely local variation in terms of this indicator. Rent growth in Brisbane in both segments of the market, it is continuing to ease. So houses over the last 12 months shifted 6% in terms of the rental price growth, and unit rent price growth shifted 6.2% over the last 12 months. So potentially, again, this is a result of reaching affordability constraints in that the rate of growth has continued to ease month on month now since early this year. So just in summary, Brisbane's house market is not growing as quickly as the unit and townhouse market. So the attached dwellings are definitely outperforming the detached dwellings right now across the city. Supply does seem to be improving slightly over the last couple of months, but it's certainly not enough to satisfy the current level of demand in the market. So we're still seeing more buyers than sellers, and this is what's continuing to put that upward pressure on prices. Growth in different price segments of the market is becoming more apparent, with that lower valued property or dwelling value outperforming that higher priced property. We're definitely seeing buyers thin in the top end of the market. There are fewer buyers actively involved at a price point upward of around $2.5 million. In that lower segment of the market, of course, we have property investors competing with first home buyers, and it's a very competitive segment of the market, especially in that unit and townhouse product in inner city locations. Prices are definitely continuing to creep upward, and that is due to the supply and demand imbalance. We still have listing volumes well below our long-term average here in the city. We still have building approvals and completions well down on where they need to be to satisfy the demand in our market. And because of this imbalance at a time where demand remains relatively strong, we're going to continue to see those prices shift. I hope that's been a useful summary. If you'd like to connect with us, you can scan this QR code. It's going to take you to some recent resources that are available to help you on your property buying journey, as well as some more up-to-date data on what is happening throughout the Brisbane property market. Thank you so much for your time today, and bye for now.